That is, of course, in addition to all of the crypto legislation that we are watching, of course, here in Australia. And just last week, ANZ unveiled a stablecoin pegged to the Aussie dollar, appropriately titled $1DC. Now, it's the first time an Australian bank has minted a digital asset which has been linked to the Aussie dollar. And to tell us all about it, we're joined now by Ian Lowe from Dacxi. Ian, pleasure to speak to you today. Look, ANZ announced this last week. Just run us through what the plans are for the coin. What does it mean for crypto investors?
Yeah, hi Elliot. Good to chat to you. Look, this is really just part of the ongoing evolution of crypto. I mean, it's worth pointing out that this is first of all, what is the purpose of what's referred to as a stable coin? What is its role? And really, it's an on-ramp and an off-ramp for a lot of the participants with these stable coins. It's a way of the portability of a stable coin on the blockchain allows them to move money around the world outside of the traditional finance system, which is slow, multiple intermediaries, lots of taxes along the way in the form of different fees to different providers. So this essentially short circuits that entire proposition, and of course it's all based on the underlying decentralized blockchain technology. So a stable coin is a great way for individuals to on-ramp assets into a platform where they may want to convert that stable coin into some other form of crypto or digital asset, and equally for offboarding as well. So it's got great portability outside of the traditional finance system. And look, it's no surprise that there's been a strong response to this. There's been a couple of attempts to do something in Australia previously, but this is far and away the most credible, given that it comes through ANZ Bank. It's clearly, fully backed dollar for dollar. Interestingly, the first transaction, I think, was with an institution to the tune of $30 million. So exactly how much of this coin they plan to mint over time and get into circulation remains to be seen. But look, it's no surprise that this has been responded to very enthusiastically by the industry, and it's very significant that we're starting to see the major banks in Australia participating in the ecosystem in this way, and increasingly willing to innovate along the way. Obviously, earlier, a few months ago, we saw CBA announce that they were onboarding crypto for their Commonwealth Bank app customers, which was a really significant signal that crypto is now absolutely mainstream and very widely accepted as a big part of the future of finance. And I think this latest development with ANZ is another clear example of that. And look, frankly, we're on this journey to the digitalization of all assets and money in all its different forms. I've talked previously about tokenization and the journey that we've commenced as it relates to different asset classes being tokenized. It's just important for people to understand that cryptocurrencies is really just the entry point to digital finance. It's a very important entry point, but now the underlying blockchain technology will be leveraged in a whole bunch of really interesting ways. And you talked about the emergence of regulation, and that's becoming increasingly likely in the short to medium term, and that will further accelerate the use of blockchain technology for the digitization of money and assets in all their different forms.
Because of course, as you did mention, Ian, it was for an institution, it was to do a big money move. But do you think that, now that they've sort of shown the proof of concept can certainly work, do you see it flowing down to the more retail level, particularly as that adoption from other banks and around the world continues to ramp up? I can imagine that people at a retail level will be sort of calling for that faster financial transaction.
Look, I don't think ANZ would have gone down this path unless they had contemplated the potential for it to be available in the retail market, and that just simply means listing the stablecoin on a one or more crypto exchanges where it's available to everybody. So they would have absolutely contemplated that. I think starting at the institutional end, getting a very small amount in circulation, and then really, they'll decide when and where they want to proceed with something more significant.
And, of course, this will be being watched by the RBA, Ian. Often we talk on this program about RBA when it relates to interest rates, but of course, this will become a predominant theme going forward. And even Philip Lowe has said he does see tokenization becoming an industry in Australia. So what are we likely to see going forward if we use this as a starting point?
So the tokenization of different asset classes, just in simple language, means transitioning to a point where ownership and transfer of ownership of different assets can be expressed digitally, where that ownership event or the transfer event is executed through a decentralized technology, which is what we refer to as blockchain. So there are a number of reasons why the world will move in this direction, and we're already starting to see it. The first is that, and it really touches on the benefits of what we talked about with the stablecoin. The first is portability. So if I own any kind of asset, it might be precious metals, it could even be shares in a company, it might be commodities, it might be property, and that's expressed in a digital form with a smart contract embedded in a token, then I have portability through blockchain around that asset in a way that is otherwise, in some cases, between sort of very clunky and in some cases even almost impossible. It also introduces the concept of secondary market liquidity. For example, if you own a token that represents ordinary shares in a privately held company, as a token that can theoretically be traded on a secondary exchange, whereas at the moment, if you hold a share certificate in a privately held company, the liquidity event options are extremely limited. So there's some really fundamental upside over time as this starts to take hold to expressing ownership of different asset classes through a digital token. For example, precious metals have already been tokenized. That's something that we've offered at Dacxi for some period of time. So that brings into play the second benefit, which is accessibility, universal accessibility to different classes of assets for the purposes of investment. And so this is sometimes referred to in the context of tokenization as the democratization of investing and finance, where anyone can participate. You don't just have to have a seat at the table for the privileged few. But when you get into asset classes like commercial property and others, that has inherent value. And then there's the third benefit is utility. So cryptocurrencies obviously have varying use cases, but increasingly around some of the majors such as Bitcoin and a number of others, there's growing utility. So there's a whole bunch of ATMs now. I think there's 30,000 ATMs in the world that are Bitcoin ATMs. So, transposing ownership of a cryptocurrency into meeting everyday costs, that's becoming a reality and increasingly ubiquitous. So it's those three things, I think, that are driving us towards the tokenization of all asset classes over time, universal accessibility, portability of the assets once they're acquired, and utility as well. And in combination, those benefits are really material.
So Ian, then what is needed to drive these three forward? We talked at the top about, various regulations coming in around the world. We know in Australia, we've got sort of some focus papers out there now seeking industry feedback. So is it a case of there does need to be some sort of regulation to help advance it, or is it a case of the industry is just going to do it anyway, and it's just a bit of give us time to really get those use cases and get the mainstream adoption pushing forward?
Look, it's a great question. The first thing is that the crypto assets industry is absolutely unanimous, and their view is that the regulation can't come soon enough. So this is an industry that is not just embracing what is inevitable, but we're asking for it to happen as fast as it possibly can without compromising the quality of that regulation. And the reason for that is that it will open up the crypto markets to a whole new market in terms of participation. I mean, today, about 21% of Australian adults either own or have owned cryptocurrencies. But clearly that tells us that the majority haven't. And regulation will really fast track to a point where the participation rate increases significantly. And not just at the retail end, and that's really through confidence. So greater regulation means that the average investor or consumer has greater confidence in the ownership of crypto and the safety around that. And that's an important signal, I think, for people to see and hear, but particularly for institutions. So there's a large number of institutions, some of the largest in the world, that already participate in crypto market. But there's a significant percentage of them, both locally and internationally, where their investment protocols prevent them from participating in any market where the underlying financial instruments are not fully regulated. But crypto markets are partially regulated through AUSTRAC and the like, but they're not fully regulated. So getting to that point opens up the participation opportunity at the retail end, at the institutions end of the market as well. And of course, that increase, the inevitable increase in trading volumes, creates a whole range of new opportunities in itself. And that's also why we've seen institutions jump in where they've started to see ETFs productized. And so that is, somewhat ironically, that is a fully regulated instrument, even though the underlying asset, which in many cases is the crypto itself, is not fully regulated. But a number of institutions have said, well, if that's a regulated instrument, we can participate, and they've jumped in very enthusiastically. Don't forget, the volatility in crypto markets is inherently attractive for institutions because they ride the up and the downside, whereas at the retail end, more of that market is geared to riding just the upside on the price appreciation.
You mentioned just in that, of course, with greater adoption, we are likely to see, institutions really getting in already. We've seen some really large fund managers in the US start to buy into sort of crypto assets, if not necessarily the coins themselves. But when it comes to ETFs, and we had Caroline Bowler on earlier today, who said it's probably a matter of months before there is in Australia a Bitcoin specific ETF. Do you think that that's sort of the trend, particularly more so for the retail level, that we will see people really start to buy into crypto? And to what extent does that ETF vehicle then further promote the industry as a whole?
Oh, well, I think it lifts the profile of crypto, particularly at the institutional end of the market. The implications direct to the retail market, I think, are a little bit different. It's the full regulation that I think will have, the broader retail market jumping enthusiastically into crypto. And it's very important to understand that from an investor's mindset, crypto is, just one element of many elements that constitute a portfolio approach. So, the very early days of crypto were characterized by 20-something-year-old males betting $100 on a long-tail cryptocurrency over a 2-week period that was the money they could afford to lose. And where we're going as an industry is there's a subset of high-performing over the medium to long-term, strong use case cryptocurrencies that are attracting more significant investment at the retail end, so $20,000, $30,000, $50,000 investment, which of course is money they can't afford to lose. So we're at that tipping point where the market is starting to change. The dynamics are shifting away from traders making small margins on small investments to it becoming a wealth creation opportunity. And of course, as tokenization unfolds in parallel with that, the opportunity to actually build a digital portfolio across multiple asset classes becomes a very real opportunity. And look, we're going to see huge development in that area this year. The coalition has really driven a consultation process for a period of time now. I think they've got a good narrative. They've got a good understanding of the mechanics and the construct of blockchain and cryptocurrencies, and they've stated that they have a clear direction. We'd love to see, particularly given there's an election coming up, we'd love to see other major parties come out and make their own plans known. We're yet to see that, but certainly the coalition have made it clear that they have a plan, and that's come through a consultation process. And I would expect, no one's put any timelines on it, but I would expect this year, if the coalition is to win government, that we will see some real movement as it relates to regulation in Australia.